Stock markets in Europe are currently trading a little softer this morning, with the UK's FTSE 100 index currently off around about 13.12. Euro Stoxx 50 index is lower by 15 points. FX markets are subdued, with the yen weaker against its peers, and the euro pretty much range bound. Peripheral bond yields are behaving themselves at the moment. Core government bonds are tracking a little lower, and when it comes to commodity prices, oil prices remain elevated, Brent at around $15 per barrel, but gold is up around about 70 cents. Good morning, I'm Ishaq, Siddiqi, and welcome to your daily market bite. I'm going to give you a quick idea of what's going on in the financial markets today. So, the overnight session in Asia was a positive session. We had two developments from China and from Japan. In China, we had better than expected inflation data, which showed inflation is moderating in the country, and that comes a day after exports data, which showed a rise, which is again better than anticipated, suggesting that the economic outlook for China has improved in the second half of 2013. That's after a very rocky first half year period for China. Many investors worried that the country may be facing a hard landing situation after showing signs of a bit of a slowdown, but that seems to be turning. We are starting to see positive sounds coming out of China, and that's instilled a bit of hope in the market about the country's overall economic prospects. Now, going over to Japan, we also had a similar sort of turn coming out from the macro side. GDP figures for the second quarter were revised higher, up to 0.9% from 0.6% previously. Now, the GDP figures are obviously a reflection of the work put out by Shinzo Abe, the Prime Minister of Japan, with his Abenomics economic policy framework initiatives to stimulate the economy. So the strong GDP figures were a testament to his framework, the fact that it is effective in many ways and is showing some signs of success. Investors have taken that as a positive sign. And then when it comes to another incrementally positive story out of Japan, Tokyo has won the job to host the 2020 Olympics, which should invite the new resurgence of economic activity for Tokyo in the form of regeneration of parts of the city and construction spending and infrastructure spending, which will regenerate the whole area and be economically beneficial for Tokyo itself. And that's being cheered across Japan at the moment. And that's also one of the reasons why the Nikkei is up over some 3%. Now, going into the European session this morning, there's not much out on the economic side. We have the Sentex index out from the Eurozone, which tests consumer confidence and general sentiment. But Greek industrial production figures, which are out later on today, and other than that, it's extremely subdued. Really, the big concern in the market, why we're trading on lower, is of course these persistent worries about Syria. The US Congress are going to convene today after a summer break. President Obama threw out the proposal to strike Syria to congressional leaders who are getting together to discuss it today. Now, if we see the vote go through, it's likely that the US will strike in the coming days. The G20 summit, we noticed that the US and Russia are ever divided on the matter of Syria, and it's mentioned with Russia calling it illegal and saying that it will defend Syria strategically and financially, and with the US saying that evidence to suggest that the Assad regime behind the chemical attacks, which killed hundreds of people. So, at the moment, markets are trying to assess the implications of what will happen next, and if this does escalate, and what this means for oil prices. Like I said, we are quite elevated on oil, and that's been the case for a while. Again, the backdrop is also with many investors contending with the fact that we are going to see some sort of tapering on board, possibly in the September policy meeting. We had the jobs data out from the US on Friday, which was a bit weaker than expected, missing on the headline front, but the unemployment rate did edge down to 7.3%. So investors are feeling a little number-wise when it comes to the overall employment situation. Will we see tapering? We will not start to see tapering. Nobody really knows. There's a possibility that we could. There are enough economic indicators in the US that suggest that the US economy has found a sustainable path to footing, but then again, the labour market is building up at a slow pace. The momentum is slow. It's encouraging, but it isn't as fast as some would hope, or at least the Federal Reserve would hope, that they can feel comfortable enough with to let go of quantitative easing just yet. So that's the reason why the market is trading the way that it is. I will speak to you guys tomorrow and give you guys a bit more information about what's going on. Thanks for watching.